Welcome to your weekly market update. There are signs everywhere around that the predictions that we are making are coming to fruition. If you've been a follower of these updates, you'll know I've been saying that we've been in a recession since February of last year. I'll show you a chart that proves that. What do recessions mean? People freak out when they hear these things. Real estate has been very stable in 12 out of the last 13 recessions. Everyone remembers the financial crisis, might have had a family member that lost a home or had some pain throughout that time. I lost a mortgage company, got in a ton of debt. So it's natural. The most painful things in your life, when you see them again, you relate things to them. This recession is not caused by the real estate industry. And 12 out of 13 recessions, real estate has done very well. All 13 of these previous recessions that I'm about to show you, interest rates actually came down. So we will stand by our prediction of mortgage rates being 5% by May and likely headed lower throughout the year. Remember, if you buy a home now, the interest rate's temporary. We'll refinance you for free after you make 6 payments. I'll do that automatically, free of lender costs. You'll still have to pay other costs. So it is a great time to buy, and I think you have a very small window to get a deal. So if we look at the charts, you will see that some of these things that we've been saying have been coming to fruition. So these are from our friends Barry Habib at MBS Highway. So number one, you see the years down here. These gray areas represent recessions. And when you see this big rollover like that, the gray area shows the recession. So this is about 10 months of GDP decline. So decreases in our gross domestic product, and it always predicts recession. Now, remember that our friends at the National Bureau, they're kind of the referees. They call the recession, but it's way after the fact. It's already happened, right? And I'll stand by the statement that we've been in it since February. The only thing keeping us from a major recession has been a strong job market. And people panic when they hear recessions, but there's a lot of opportunity, a lot of wealth created in recessions. So big rollover there, 1975, hyperinflation in here, right? Same thing in the 80s. Big rollover, you'll see it here. Big thing, big rollover here. Here we are now, right? Big rollover, we're in a recession, right? So what do we do about that? Well, you'll see some sellers maybe panic a little bit and be willing to negotiate on price. You'll see just more control by the buyers. Now, here's a second thing that shows us, and this is from the conference board themselves. 10 months of slower growth, meaning negative growth. These all mark a recession. We had it during the pandemic. Now that was caused by a virus, right? This is caused by inflation. This was caused by the real estate industry back during the financial crisis. The longest recession, which really took from about 2007 to 2010. I think we'll have a very quick recovery. I think the Fed is doing the right things. You hear the massive job losses. It's short-term pain for long-term gain. So we're seeing a lot of good signs that this will be a quick recession. And know that the early dot-com bust that lasted about 1.5 years. So you can see we are all the indicators right now that prove the recession, right? Let me show you one last thing just to prove the statement. This is several indexes and different sectors of the markets. 6 months ending in December, you'll see almost everything is negative besides T-bills and by manufactured new goods, right? Well, the blue is December. Everything is negative. There's not one positive number. So that usually signals the bottom of a recession. So we're starting to see things bottom out and come up. You see that in the stock market. You see that with interest rates at their height, which was about 7.5%. They're anywhere from 1% to 1.5% lower right now. So we just see a lot of good signs that we're in a recession, but we're bottoming out and we'll come out of it towards the end of the year. Recessions always equal, remember, stable real estate besides one. And it also tells you that mortgage rates will be coming down. 5% by May. into the 4.5%, I think, next year. If the government aids that with quantitative easing, which means buying mortgage bonds, that will go even lower. So negotiate the price of the property, that's permanent. Get some credits if you can. Get the repairs on the inspection. Sellers are doing all those things now. It's a more even market. By May to June, I think it will the shift back to the sellers. So if we can run any numbers for you, we put 6 deals together this weekend. We're here to do that. We're here to use our tools. Remember our $5,000 pre-approval guarantee. Remember our 15-day close on time guarantee. Remember the appraisal gap coverage. Other lenders don't have this. These aren't a cross-country mortgage things. These are a Lubin Group thing. So for those realtors watching this, have a lender that's a partner in your business, not an order taker. I will be a partner and an investor in your business. Have a great week. Call me if we can help you with anything, any new buyers, any numbers if you're a buyer watching this that you need run. Be aggressive in your search, and we're here to help you with that. 312-731-4939.